Hi everyone, today let's talk about Janet Yellen's comments. Then let's go over this article talking about how the markets are not listening to the Fed and expect cuts this year. Then we have lots of charts to go over. Then we'll go over my positions and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Janet Yellen comes out and says U.S. banks may tighten lending and negate the need for more Fed hikes. I still don't think this is the case, but it's interesting to see this coming from a high government official, especially one directly related to money like the U.S. Treasury Secretary. So she starts off by talking about the recent bank failures, the same thing we've been talking about in just about every video it feels like, and then mentions the fact that banks are likely to become more cautious, and that we've already seen tightening as a result of the failures, and that it could be a substitute for more Fed hikes. We'll take a look at the Fed futures after this, but it still seems like we're going to get at least one more hike. And she did mention that the tightening standards have not been dramatic enough or significant enough to alter her economic outlook. And again, we'll look at this on the charts because where we are right now in terms of lending standards is pretty high, especially when you compare it to 2001 and the recession that took place during that time. They also mentioned that the weekly bank balance sheets published by the Fed have not shown a deterioration in bank lending, and that they do show that deposit outflows have stabilized. So hopefully we don't have any more bank failures, but we're not quite seeing that lending standard increase that we were expecting. And then she went on to address some of the dollar dominance discussions. And she did acknowledge the fact that there is some risks here. So we've put a lot of sanctions on Russia, and they're going around that by selling oil to Iran, North Korea, and China. And you can see that highlighted here. We're only buying oil from them at $60 per barrel, so they're definitely not getting very much money out of it. And that is cutting into their ability to wage war, which is the intended result. But the question is, does this erode the dollar's role as the world reserve currency? She does acknowledge this risk here. But at the same time, she does say that it's not easy to replace the dollar. The dollar is widely used in basically every market. And we have very deep capital markets and rule of law, which does put a lot of faith in the dollar, and that's why it's so widely used. In terms of an alternative that has the same basic infrastructure as well as institutional infrastructure, it would be pretty hard to replace the dollar, at least with all the information that we have right now. Moving over to this opinion piece about how the markets are not listening to the Fed, he says the fact that we're going to get 25 basis points in the May meeting is nearly a lock. And like I said, we'll talk about those percentages. It's very high right now. And what they're telling the markets right now is that we're going to be at 5.1%, which is the next range, including the 25 basis points, through the end of the year. He goes on to quote the CPI data, saying that core CPI rose at 5.6% from last year, and the last 3 months rose at an annual rate of 5.1%, so very high still on CPI, and this really does support the case that we're going to see higher rates for longer. He then goes on to quote the University of Michigan inflation data projections, which actually jumped up to 4.6 from 3.6. Again, predicting a potential increase in inflation. And if we do get that, then we're going to see some pretty big down moves in the markets because that would really take away any potential for cuts later in the year. The Fed hasn't signaled any cuts, but they have been pretty data-driven. And for them to do cuts, we would have to see inflation come down in order to prop up the economy a little bit. And if they do that prematurely, it's going to be bad for everyone. So they're definitely walking that tightrope. And like we said before, the market is still pricing in some of those cuts later in the year. So looking at the Fed futures, we can see we're very likely to get that 25 basis points in May. June, we're still looking at a pause. But then when we get to July here, still paused is the highest percentage, but the percent chance of a cut does start to go up pretty close here to that pause number. And then by September, we're projecting a cut, 42% chance of a move back down to 4.75 to 5. And then getting to November here, pretty much a split decision between a pause there and another cut. And then looking at December, we're expecting to be down at 4.5 to 4.75 at the highest percentage, and then potentially another cut down to 4.25 to 4.5. So markets are basically pricing in 3 cuts before the end of the year. We don't know exactly how that's going to play out, but that's what the market thinks is going to happen right now. And you can see this is actually drifting down. So numbers the previous day were much higher, and you can see those percentages at the beginning of the week have also drifted down to the previous day. So markets are pricing in more and more cuts before the end of the year. And if this doesn't play out, we could definitely see more downside in the markets, and we have to pay attention to that. Moving over to lending standards. Since we talked about it, you can see Q1 2023 lending standard was 44.8 as a percentage, which is right where we were during that recession here in 2001. You can see peak was 59.6. Recession starts, we're at 50.9, 40.4, and then we went back up here to 50.9. So you can see we rallied into the recession. Recession starts, we come down a little bit and then bounce. And then as we start drifting down here, then we're out of recession and we go back to a more normalized rate. And then we start drifting up here, recession, start drifting down, recession ends, and then we're back into a normalized rate here. So pretty interesting. Obviously, 2008 was a unique situation. 2000, not super comparable because we do have inflation to deal with, but it's worth noting we were in that same range that we are right now, which generally does lead to a recession. Moving over to the earnings calendar here just for a moment, you can see Monday, Charles Schwab before market open. Pretty much the only one to pay attention to on Monday. Looking at Tuesday here, we have Johnson & Johnson, Bank of America, Netflix, Lockheed Martin, Goldman Sachs. Pretty much all of those are pre-market, except for Netflix here after hours. Looking at Wednesday, we have Tesla, obviously a big one. Morgan Stanley in the morning as well. IBM's always interesting. Thursday, we have Taiwan Semiconductor, Philip Morris, AT&T, American Express, Union Pacific, a couple of interesting ones in there. And then for Friday, we have Procter & Gamble. SLB is an oil company. I do like to trade that every once in a while. But big week here for earnings, and we are definitely in the thick of it with Tesla this week. Moving over to the charts, starting with the S&P 500 here on the weekly chart. You can see we got another up week after the candle of indecision last week. Kind of watching this trend, although we did break down and retest this lower level and then find support. Tons of volume on that candle as well, and you can see we've had a solid follow through. We're above all the EMAs and SMAs, so definitely a bull trend here. And looking at resistance, it seems like 42.28 is going to be your upper limit, especially now that we're slightly above this trend line that we were watching. And if we get above this level here, then we're looking at 43.30. That would be right at the highs going back to August of last year. So right now, still bullish. Momentum, still bullish. RSI, definitely bullish. Moving over to the daily chart here, you can see we're still in this rising wedge, looking to break out above this trend line. We're pretty much right on it here in the daily chart. Still looking at that 42.28 level for upside if we break out from here. A higher high from this high here in February. Everything still looks okay on it. Momentum, not super strong. RSI, decent. You'd really like to see a strong volume push. If we do accelerate to the upside, that means that we're probably going to get more follow through here. We've kind of been watching this left shoulder head, right shoulder setup. And if we do take out the head, then that would invalidate the pattern. We could certainly see a push up and then a come through. If we did get below this trend line here, then we're looking back down to 40.28, and that would be quite bearish. So right now, those are the two levels that I'm watching going into Monday's session. Moving over to the SPY daily chart, you do want to highlight this inside candle that we got right at the end of the day. We had choppy price action, big red bar, followed by a big green bar, making a higher high here. And then we gapped lower and then made an inside day candle, which is generally a bearish pattern. Doesn't mean that we can't get another leg up, similar to what we did here, where we had a big green bar, inside day, another leg up. Then we had the big gap down and then follow through to the downside here. So do keep in mind that this could be a reversal in terms of candle patterns. And we did tag that 414.96 level where we did get pretty strong rejection. This was a high level that I was watching going back to the February high as well. So keep that in mind. Certainly could be a reversal pattern, but RSI is still strong. Momentum is fairly neutral where we're at right now. Moving over to the NASDAQ here, it looks significantly weaker. We're stuck below that 144 EMA here on the weekly chart at 13,135. We tagged that level, got rejection, down in weekly momentum. RSI is still bullish, so keep that in mind. But step down here in weekly momentum did lead to a move down the last time, even during this rally. So you got the rally, couple of steps down, retested the 200 SMA on the weekly chart, and then we got the rally to where we are right now. So looking at the weekly chart, still kind of bullish, but definitely showing signs of weakness. We actually had a fairly similar setup here in November where we had a candle of indecision, fairly strong candle, got a big move up, tested a resistance level, and then we got a rejection. So that's a scenario that we could see. Overall, it's still a bullish trend. We're just at a key resistance, and we do have to be careful here. Moving over to the daily chart here for a moment, you can see we've been chopping sideways all the way since 31 March in the same range for a while, not doing a whole lot of anything. Does look like we're ready to break down. Similar candle pattern. Big green day, inside day. We have had that once before here, and we continued to go sideways. We're still finding support at this level here, 12,985. If this does break down, then we can look at the 21 EMA just below at 12,860. But remember, still a bull trend, still slowing down, and you do have to be a little bit careful with that. Another key difference here on the daily chart is that momentum is bearish. RSI here, this is a pretty key setup when we were coming off the high here in February, come down below that SMA on RSI, retest it, and then you get a move down with some follow through. And that's kind of what we're seeing here now. So we got below the SMA, had a deeper cut, came back up, retested. We're moving back off of it now. If we get some follow through to the downside, that would definitely be interesting. And it might have a deeper follow through to some serious levels based on where we've been here before. Moving to the actual cues here just for a moment, I want to highlight how we've been chopping, hitting that 315.98 level, hitting that 319.60 level, so still stuck in this range. You can see a slight bull flag pattern, but really it's been sideways. And like I said, if we break down, we could certainly come down to 310.80. That would be interesting right at VWAP, currently sitting at 311.28. Come down and retest these levels. If we do get some follow through, it's certainly possible that we could breach back down to this 300 level. This has been a key level here multiple times. And if we do get a strong breakout of this zone, that would be my first price target that I would be looking for in terms of buyers potentially stepping back in a little bit. Moving over to the Russell here on the weekly chart, I did add one major trend line. Zooming out here so you can see where it starts, we have February of 2003 marking these lows. Marks multiple tops and bottoms throughout 2011 and 2012. Marks that bottom here in December of 18. Interacted with during that COVID move. And then even here recently, you can see it did have a fairly major role marking this bottom. This top before the breakthrough, had a reaction here on the way down, so it's been fairly interesting. And I did decide to add it here, and that would be an initial price target if we did break out of this slowly sloping upward move that we have right now. Momentum is not showing us much. We're basically flat here, not sloping in one direction or the other. RSI did establish a slightly higher low, which is interesting, somewhat of a bullish indicator, potentially looking for a move up to that 1900 level. That would definitely be a pretty strong move from where we are. But remember, we are below all of the EMAs and SMAs here on the weekly Russell chart. And then I also added this line here, which marks the pre-COVID highs. And you can see we came down right to that level on the week of 20 March. Before we got a pretty strong rejection back up into this range. And it does seem like this is somewhat bullish, or at least finding support in this zone until we can make a more bullish move. The alternate theory is that we're coming down into more of a bear flag and that we're eventually going to get a solid breakdown of this slow sloping structure, and then we'll push through these lower levels. And if we do get through there, there's not a ton of support until we get to this major trend support down at 1450 or so. Moving over to the daily chart here, you can see similar thesis. It does kind of look like a bear flag, but so did this structure that we had back here in September and October. And we ended up breaking higher and establishing a higher base, which then created a higher low and a higher high. And then we broke that structure, coming back into this low that was even with the previous low. And we're still in that range here. It is worth noting that we're slightly above this consolidation at current prices. We're also above the 9 EMA here on the daily chart, as well as the 21 EMA, which is generating a bull trend on the shorter time frames. Momentum still bullish, but weak. RSI somewhat bullish here as well. You'd like to see this get above the 50 line and hold, that would be nice. But right now we're still above the SMA, which is good. Overall, it's hard to tell exactly what's going on until we get a break one way or the other, but you have to respect the bull trend on the shorter time frames. Moving over to the Dow here on the weekly chart, looks significantly more bullish here than the Russell. You can see 4 weeks in a row of bullish price action, momentum moving into bullish territory. You want to see a break of this longer trend line that we have here. It's marked so many tops here over the last year or so. And if we can get above here, there's definitely some decent upside. Probably find some resistance here around 346.30 or so. And then up here around 350, 375 back at these previous highs from April. But in terms of a trend, you can see there's not a lot of overhead resistance right now once we get through this current level at 341.34. Moving over to the daily chart here, you can see basically the same things. We're bullish on all of the EMAs and SMAs. We're right at that resistance point. Momentum is fading slightly, which is interesting. RSI continuing to look bullish. But we did get an inside candle here, which is bearish. You can see last time we had an up move, inside candle, we had a lower day, and then we ended up selling off here from February into March. So we have a clear example of what this candle pattern usually looks like. Certainly see another up day potentially here, but then overall that does tend to fail over time. And then we'll get a low. We'll see if that's a higher low potentially set up, and then we get a push through. That would be interesting. But right now you do have to recognize that there is potential for at least some level of a pullback. Moving over to the equal weighted S&P 500 versus the actual S&P 500. This is ticker RSP. And I really just want to highlight the divergence that we have here. So equal weighted S&P making a lower high setup when compared with the high from December. This looks much more like a left shoulder head, right shoulder setup with a lower right shoulder and a lower low on that right shoulder. It's potentially going to roll over basically right where we are right now. And then when you compare that with the actual S&P 500, we had resistance in November and then sold off just like the equal weighted one. Right now, that right shoulder is getting very close to that head level, which is interesting. But the right shoulder here on the equal weighted one is definitely not keeping up with that move. So this move right now is being driven by those higher market cap companies. And we've talked about this before. The FANG stocks sitting at the top of the S&Ps and the top of the NASDAQ are driving this move. And usually when that happens, we do see a pullback, which tends to be fairly significant. Moving over to the ratios here, starting with the NASDAQ divided by the SPY, you can see NASDAQ has been outperforming. It's been pulling back here recently. The SPY outperformed for 3 weeks. Right now it looks like a flag. We'll see if it breaks down. If it does break out though, then we'll see more NASDAQ outperformance. Momentum is pulling back, and RSI hit overbought conditions and is pulling back here. Still in the structure, so it's still bullish, but there's definitely potential that this could be pulling back. We'll look to see if we come into this 310 level. That would be interesting. Or if we come back up and retest the 144 EMA up around 324. Moving over to SPY divided by the Dow, you can see the SPY has been outperforming. Dow outperformed over the last 2 weeks. And again, we're looking to see if we bounce from here and get more SPY outperformance, or if the Dow is about to take over. And this is really just a lower high setup in this overall downtrend. If the Dow is generally leading, that usually indicates to me that we're going to see lower prices in the markets, and we're going to see the old economy holding up better in those conditions. Similar thesis on momentum and RSI. Momentum pulling back. RSI still above the SMA, but pulling back. If it bounces off the SMA and goes higher, maybe we see another leg up. But right now, it does seem like we're at a point where we're going to have to see what happens. You can see here we had a similar move where we came back into it, went flat for a week, and then we had a further move lower. There's definitely potential you could see another bounce higher from here. But there's definitely potential you could see another bounce higher, and then we get a rollover later. Moving over to SPY divided by the M2 money supply, you can see we're testing this level that we marked here in February, basically at that same level, which is very close here to the August high, which marks basically the midpoint from January of 2018 all the way until October of 2019 before we had that really strong push up to this highest level, which was the same level here on this chart that we marked here in December of 21 before we got that pretty large pullback into this region. In terms of the shorter term price action here, you can see we're definitely in an area of resistance. We're not at the trend resistance yet, so this could certainly go up right to the highs from the 30 January week, which would be about another 1.5% higher and would be very close to marking those same highs here from August. If we did get into that zone and we got rejection, we could see a fairly large move, which is about 5% down from where we are right now. So definitely at a critical level. You can see momentum still building to the upside. We have the EMAs on the MACD continuing to go higher in a bullish trend. Despite all these potential indicators of downward price action that we've talked about, you do have to respect these kinds of trends, which we are definitely in one. We're right at the 144 EMA here. We ended up closing right on it. We also wicked it last week. And if we get the candle break continuation here, that would be very bullish, at least for the next week, in my opinion. And moving down here to the daily chart, you can see that same inside candle that we were watching to see if this pulls back here going into early next week, looking on about 2.5% to the major support down around 55 EMA and the 21 EMA. Right here at the highs from the end of January and February. This could be key resistance where we could get that bigger pullback. But right now we still haven't seen it, and we are still in that bull trend and holding above the 9 EMA here. Moving over to the put-call ratio here, I don't talk about this in every video, but it's worth mentioning here. We saw some wicks down around 0.5, which is a level we haven't seen here since April, which is definitely interesting. And it does seem like we're trending back into that zone. And if we do get some wicks through this 0.51 level, that usually indicates that things are a little bit overly bullish. You can see put-call ratio rolling into bullish territory. As this ratio goes lower, that means that there's more calls in the system, generally meaning that market sentiment is more bullish. And you can see there's definitely a short-term trend into the call area. And as this starts to mark these lows down around that 0.5, that certainly indicates that we're moving higher in the markets. And once you start to see these wick through these lower levels, that could be a pretty good indicator that maybe we should be exiting these positions. So I might keep a little bit closer look at this one, especially since we're seeing this rolling over of the put-call ratio. But this is definitely one watch here in the short term. Moving over to Apple and Tesla here on the weekly charts. Apple looks like it's still in this rising wedge. We did overthrow it here. We did fill the gap going back to the August high. And now we made a slightly higher high in terms of closing, just 0.33% higher. We're right at that trend line that we've been watching. So we're back in the wedge, and it certainly seems like this could roll over. You have to respect the trend, but we are pretty extended from VWAP and the 9 EMA here, so certainly could see a pullback, which would represent a breakdown from this rising wedge here in Apple. And if we do see Apple roll over, that would be very bearish. Momentum did step down this week, which is interesting despite the higher prices. RSI still showing bullishness, and you can see we actually had a lot of volume this week compared to last week. We did get lots of inflation data. That was pretty positive overall, which could push this higher, which could cause Apple to not respect this rising wedge pattern. But right now, this is still what I'm watching, still bullish in the short term, so timing is everything. But if this does break down from this structure, there certainly could be some lower prices, and I would really be looking for a low down around 154.45, right around that VWAP level for next week. Looking at Tesla here, pretty clear high, lower high setup with a midpoint. We have Tesla earnings this week, and if it comes in weak and we break down from this midpoint, there's a lot of room here below this 167 level where we could definitely see some pretty strong pullbacks. Momentum has been telling us that we're going to go lower here for a while, but we did get a no change candle. It was down 0.03% on the week with pretty decent volume, which is interesting. So if we do get a little bit of follow through into earnings, throw a wick higher on earnings, and then we get the rejection, that would be a pretty classic fake out. So keep an eye on this. Right now, we're basically at VWAP sitting at 184.84, and the closing price here was 185. So we're basically at VWAP waiting to see what happens. And still, in my opinion, this looks weak going into earnings. Moving over to staples and discretionary here on the weekly chart, you can see staples has rallied for the last 4 weeks. Got a candle of indecision. Momentum still bullish. We're right at this 65.40 level. We've been watching that for a long time. Talked about 76 as your potential next level if we can get there, and then 77.50 to the upside if we get a pause continuation. But right now it looks to me like this is probably going to roll over. We have a lot of bearish signals in the markets, and usually staples doesn't go up when everything is going down. It just holds up a little bit better, and I think that's going to be the case here. I think we'll see a little bit of a pullback as everything starts to roll over as we get into earnings season, and it'll just kind of stay generally within this zone in my opinion. Like I said, momentum is still bullish, so it certainly could go higher. Moving over to discretionary, you can see we've been in this wedge for a while, similar to Tesla actually, going basically sideways for the last couple of weeks. We're right below the 55 EMA, which continues to act as resistance, and it does seem like that's going to kind of drive this price to the downside. Does seem like a high, lower high setup. If this does break here, then we look to see if this midpoint is going to break down. If it does, then we're looking back down to these previous lows around 127. Certainly could find some support at these previous consolidation lows around 135. It's very close to the lows here. And like I said, looking for that breakdown back down to that 127 level. Overall, the discretionary looks pretty weak in the longer time frames. Moving over to transports here on the daily and the weekly, I want to highlight we do have a rising wedge set up here on the daily chart, making even highs and higher lows. Looking to push up to that resistance one more time, waiting to see what happens there. Momentum bullish, RSI bullish on the daily chart. But it is worth noting on the weekly chart, we have the 9 EMA, 21, 55, and VWAP all sitting at this level up around 226 to 227, which also marks those previous highs on both charts. So looking to see if we can get through that level would be very bullish. If we can get through it, then we're looking back to these previous highs. That would be interesting. Momentum on the weekly chart is neutral. RSI basically neutral here right at the 50 line. So could go either way on the weekly. Daily chart looks slightly bullish. Waiting to see what happens with all of these EMAs and VWAP in this zone. Moving over to semiconductors here on the daily and the weekly, you can see we're watching this left shoulder head, right shoulder setup, still in this right shoulder. We're holding up fairly strong. Momentum is still moving in the bearish direction. RSI still looks bearish. Not a ton of volume, which is interesting. You'd want to see it happen on higher volume to see if we're going to get that follow through. And looking at the weekly chart, you can see this is definitely still a bullish trend, and you have to respect that. We're still above the 9 EMA here on the weekly chart. We have VWAP sitting down here at 245.70, but even a push down to 245.70 would be a pretty decent move to the downside. Test VWAP, potentially throw a wick to this lower bound down to around 242, which would be a pretty substantial move. Momentum on the weekly is definitely stepping down. RSI is just barely below the SMA. Again, indicating a potential rollover here to the downside. Definitely get a super clean setup, move back in, retest, and then get the breakdown. Similar to a move like we had here from February into March, where you come down, get into this zone, retest, and then get the continuation lower. But right now it does look slightly bearish. Moving over to yields here on the 2-year and the 10-year on the daily charts, you can see we've kind of put in a bit of a base here on the 2-year, and it does look like we're going higher now. This is probably because the 25 basis points is extremely likely here in May, and the 2-year is starting to price that in, looking back up to 4.26 to the upside. 10-year is retesting the 200 SMA at 3.53. Looking to see if we can get back up to that 3.57 level back from the end of March. And if this does continue higher here, that's going to be weak for stocks, in my opinion, especially growth. You can see momentum on both of these as well as RSI is bullish. So yields look like they're set to go higher, which generally equals lower prices in equities. Moving over to percent of stocks above their 50-day and 200-day averages in the S&P 500. You can see the 50-day average did close right at the same level from Thursday, but it did wick a higher level, so it's still trending up slightly. The 200-day average, though, is definitely looking weaker. We gapped down from Wednesday into Thursday and then ended up closing slightly higher right at that same level as the open on Wednesday. And now we had a big move lower on Friday. Despite higher prices, generally that's not good. We're losing breadth, but we're making higher prices. And if this does start to roll over here, that's going to be a pretty bearish move. You can see we're fairly extended to the upside as well, which means this could move lower fairly quickly. And jumping over to the 20-day average, I just want to highlight how this looks very similar to the 200-day average, just in smaller percentages. We're right at that overbought condition. This is a very high level for this ratio. And like I said, this does look like it's starting to roll over. We're below the SMA on the RSI, momentum looking bearish. And if this does start to move lower, that generally indicates some lower prices are coming. And we're just kind of waiting to see if the 200-day does follow suit with the 20-day. Moving over to the dollar here on the weekly chart, you can see this is still definitely a downtrend, and we are rolling over here still. We've had 5 weeks in a row of downward price action. But what I do want to highlight is the fact that our RSI read right now is at 36.41. The RSI reads going back to these lows in mid-January were at 35.28. So we're at lower prices here, definitely lower at the close, but we are at a higher RSI read compared to those prices. So generally looks like we're finding a little bit of strength. Still can't close below that 101.25 level. We did get below this major trend line, which is interesting. Hit that lower support level. We have not taken out the wick here from the 30 January week, and momentum is still slightly bearish, but it's moving down very slowly. RSI is definitely moving down slower, but you do have a little bit of divergence between price and RSI. So looking to see if this is going to bounce from this level. And again, if the dollar starts going higher, that's going to be weak for equities going into the next week or two. Moving over to J&K here on the daily and the weekly chart. Weekly chart not telling us a whole lot. Definitely just looks like we're still consolidating. We have a low, higher low setup. We have a high and then potentially a lower high setup. So we're wedging in here. You can see that better here on the daily chart. We are right at resistance. We have a little bit of a double top potentially starting to break down, looking to move back into this lower range down around VWAP sitting at 91.35. We also have minor trend support here at 91.15, looking to see if we get a pushback into that zone. That would be bearish for stocks, but overall still wedging and waiting to see if we get some more clear direction. And you can see that area of highest volume on both charts is basically in the center of that wedge because this has been a consolidative pattern and still waiting for more clear direction, but short-term bearish. I also want to highlight we have an RSI read of 57.98 at the current price. And if you go back to 3 April, which actually had a lower price close, the RSI read there was 59.41, indicating higher price, but lower RSI read at current prices, which generally means this is going to go lower in my opinion. Moving over to TLT, this one's been pretty tough here recently. We've been consolidating in this zone. Momentum looks weak, RSI looks weak on the daily chart, but this could be a pretty decent island reversal type setup. Came down, filled this gap, hit the 55 EMA on the daily chart, looking to see if this is going to move higher. Remember, yields do look like they're going to go higher, so we do have to keep that in mind. You could definitely get a continuation. We had a huge gap here, and then we ended up going lower before we went higher. But then you can see at the end of that move, we put in an island, and then we got a strong reversal. So this certainly could island reverse, but it could go lower in the short term as well. So definitely neutral to bearish here on the daily chart. Weekly chart not showing much of anything, continues to consolidate in this zone below the 55 EMA. Looking at the shorter term EMAs as well as VWAP, sitting down at 105.19, right in that 105 zone. So we're basically sitting on top of all of these shorter term supports. We'll wait to see if that ends up holding and then getting a push higher. Does seem unlikely with yields set to go higher in my opinion. So maybe we get a little bit deeper pullback down to the 102.50 level and then we get a push higher. That would be interesting. We also have this shorter term trend line support sitting down at 103.66. So potential areas of support in this zone. So overall, it seems like we're going to go lower into this zone, probably find some support, and then get the continuation higher once we get a little bit more information from the Fed after this next rate hike. Finishing up with the charts here on the VIX. I know we talked about it in the Friday video, but in case you missed it here, you can see we are at this major trend support. We did end up closing below it for the first time since December of 2017. We're also getting into these lows here from June and July and August of 2021, which did end up being a pretty bullish period for the market. So if we stay in this zone, maybe we see a little bit of a continuation. But so far, every time we get into this trend, we do end up seeing a pretty strong reversal and a move back into these higher levels around 21 to 32. So keep an eye on this right now. Still trending down. Momentum is still bearish. We're right at that wick low from the 30 January week. And if we do bounce from here, that's going to be pretty weak for stocks. So keep an eye on this one. Super critical to see if we break this wick, come down, test this trend. That would be interesting. And then get a reversal. Definitely one to watch going into this week. Moving over to my accounts, just for some transparency, you can see I am bullish on the IWM. We did have a pretty strong push into the end of the day, even after being down 1%, so that was interesting. And looking at the after hours pricing, we were up about 50 cents here on the Russell as well. So rallied into the close and then went higher after hours. Looking at the Qs, similar thesis, we ended up going higher about 50 cents after hours, which might put this 321 call in a little bit of a tougher position, but we're pretty close to upper resistance, so we'll keep an eye on this one. I do have 2 puts as well, so I'm actually much more neutral here on the NASDAQ at this higher price. We are going higher, but like I said, we're at resistance. And I do think this is a pretty decent position right here. You can see the vast majority of my credits are on the put side, so still slightly bullish, but with an element of bearishness going into Monday. And I do think the Netflix and Tesla earnings are going to set the tone here on the NASDAQ. So we'll see how that plays out later in the week. Maybe it'll give us some more clear direction. If earnings come in better than expectations, we could definitely see higher prices in the NASDAQ. But for right now, I am neutral. Let me know down in the comment section what you think of Janet Yellen's comments and the thesis that the markets might not be pricing in some of the risk or the overall charts. Of course, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.